joint venture accounts. Now in this video, you will learn how to record joint ventures in the books of the parties for a joint venture. You will learn how to calculate profits and identify how much each of the parties must pay to the other parties at the end of the joint venture. My name is Senior Hannington, your accounting tutor. Now we need to understand the nature of joint ventures. Sometimes a particular business venture can best be done by two or more businesses joining together to do it instead of doing it separately. So you and I come together, we join our resources, then we start up a business. So the joining together is for this one venture only. It's not joining together to make a continuing business. So such projects where we come together, we pull our resources, we start up something temporarily. Such a project is known as a joint venture or joint ventures. Therefore, joint venture is a form of partnership formed to undertake one particular transaction that will be mutually beneficial to the parties. That's the joint venture. For instance, a merchant might provide the capital, the transport to the markets, and the selling skills. Then the farmer grows the produce. So you see, we have a merchant and the farmer. The farmer grows the produce, the merchant provides capital, transports the products to the market, and then sells them. But of course, don't forget that this joint venture involves a return, the profits or losses. These have to be shared between the merchant and the farmer in this case in the agreed ratios. So it's like a partnership, but only for this one transaction. There may be several joint ventures between the same businesses, but each one is a separate venture. The agreements for each venture may be different from each other, but don't forget, we are treating each venture separately. So you can enter into a number of different joint ventures at any one time with the same party or with several different parties. Now, how do we account for joint ventures, for these small joint ventures? The accounting is very, very easy for the smaller joint ventures. Of course, each of the parties will record in their own books only those transactions with which they have been concerned. If I'm a farmer, you're a merchant, you record your transactions in your own books. I'll also record my transactions in my own books. Simple. So the first stage, each venturer will have to enter up their own part of the transactions. Each party to the venture opens up what we call a joint venture account. This joint venture account is debited with all the expenditures undertaken in pursuit of the venture, i.e. the payments for goods and other expenses. Those payments for goods and expenses are debited in the individual joint venture account. The joint venture account is credited with the venture receipts. Sale of goods, whether cash or on credit, to credit the joint venture account. So that's what we do in the first stage of the accounting or joint ventures. Stage 2. Now at stage 2, the venturers know only the details in their own set of books. They do not yet know what the details are in the other person's books. This means that at this stage, we cannot yet calculate, the profits. Reason being that I know what I have incurred, what I have received, but I don't know what the other party has paid out and has received. Still, we cannot find out how much cash has to be paid or received to close the venture, because the venture has to be closed at the end of the project. To do this, of course, they must send a copy of their joint venture accounts to the other person. So I send you a copy of my joint venture account. You also send me a copy of your joint venture account. When you receive the copies of the other person's joint venture accounts, now we can draw up what we call a memorandum joint venture account. Now, in a memorandum joint venture account, we are including the details from each joint venture account. If we are 3 parties, we have to include all our details in the memorandum joint venture account. The memorandum joint venture account is not a double entry account. No. In reality, of course, it's like an income statement for the venture. This memorandum joint venture account reveals the profits or losses generated by the venture. Okay, so it's drawn up on to find out the profits or to find out the shares of the net profit or loss, and then to calculate the amounts payable and receivable to close the venture. The profit, of course, is the difference between the two sides of the account. We have transactions on the debit as well as transactions on the credit. Remember, I told you that on the debit, we record payments for goods and then other expenses. Then on the credit, we record the receipts. The balancing figure in that account is the profit. It can be a profit or loss, of course. Okay? It can be a profit or loss. So that profit or loss, of course, you have to share it among the partners or among the venturers using their profit or loss sharing ratios. After balancing off that joint venture account, the memorandum joint venture account, then you will have to enter the figures, the accounts of the venturers, which balances and closes off the account. So the net profit shares need to be brought into their own books, the venturers. Finally, the parties in the joint venture need to settle their debts to each other. They know whether they are to pay money or receive money when they look at the side of their copy of the joint venture account and see whether the balance is a debit or credit. If the balance brought down is a credit balance, money is owed to the other party in the joint venture. If the balance brought down is a debit balance, money is due from the other party in the joint venture. Subscribe. You will be notified about my latest uploads. In the next video, we are going to see how we can account for joint ventures using a practical example. Thank you for watching. I remain your tutor, Senior Huntington. Bye-bye.